but yeah, it'll be interesting to see who connected via the links.
Hi, Andrew. Thanks so much. We are live. I'm just going to quickly dash over to the Instagram to press live on that side. Thank you so much for everyone that is here today. Welcome to the Entrepreneur Mindset segment. I am ecstatic to have Andrew Marsh with us. I don't know if I must put him on the spot and let him read a bit of his own bio or tell us a little bit about himself. I think I might just do that because I said to him earlier on, I'm fasting, so I'm going to do less of the talking. I'm going to put him on the spot today, and that will be the first thing. But before we go there, I would like to greet our listeners today that are joining from near and far. So good morning, good afternoon, and good evening for those who are Eastern time or Pacific time joining us. And then, as always, this is an interactive, engaging segment. We're going to share some narrative and story in terms of Andrew's amazing founder story and along with the challenges and how he has navigated the highs and lows of entrepreneurship. But we also like to hear from you, and if there's any questions you might have for Andrew, put the pressure on. Ask away. So I'm going to ask Andrew to introduce himself. I'm going to change it around today. Andrew, over to you.
Thanks, Anissa. Great to join you and all the viewers out there, and looking forward to having a great hour chat with you. Just briefly as background, Managing Director of Efficacy Payments, basically a fintech that I co-founded with 4 others about 8 years ago, and currently the Managing Director, and I also look after financial services for our holding company known as Akelo. My world has basically been, or career has basically been in the payment space since really inception. I started in the insurance industry, whilst I was still studying at varsity, doing a BCom honours that I graduated with, and then straight after varsity, I went into banking, worked for 2 of the big banks, but very much on the alternative relationship models, typically what was known as co-brands, and across both the banks that I worked for, spent time engaging very much with the third parties and incorporating those relationships into the banking relationship. Then spent 10 years at Visa International, managing the likes of Mozambique as a country director. Also looked after one of South Africa's big banks as a relationship manager. And that was for the first 5 years. And then the next 5 years spent that looking after what Visa at the time termed non-banks or non-traditional clients. And these were basically everybody in the payment space that was playing in payments but wasn't a bank. And Visa was obviously concerned that there potentially was disintermediation that would take place in the market, bearing in mind their customers was traditionally only the banks. And that was really around about 2010, the birth of fintechs, and as we know them today. And so got my teeth into understanding all those sort of banks or non-bank relationships, but some of them were really at its infancy in terms of growing and starting their journey into the payment space in South Africa. Brands that you might recognize being Yoko, Ikorka, Peach Payments. These were all entrepreneurs that I actually interacted with at my time at Visa. They didn't have offices. We met in coffee shops. It was literally, I paid for the coffee because they were very much bootstrapping themselves at the time. And so those businesses grew. And, from a Visa point of view, I could give them insights and get them going and introduce them to a number of key parties that really got their relationships off the ground. And it's actually tremendous just to see how they've succeeded and grown today. And there's a whole lot of them out there. I mean, those were just to name 3 of them. And then in 2016, I left Visa and sort of had 2 choices. And one was I always had in the back of my mind that I wanted to do my own thing. And the other one was potentially to consider another corporate role. And so I was at a junction in my life and I thought, you know what, now or never, let's go and try and do our own thing. And so we created Efficacy Payments. The reason why we exist briefly is we're trying to solve the financial inclusion play and cash displacement. Now, everyone talks about financial inclusion in terms like banking the unbanked, and that come immediately to mind. And I think that's probably where people that talk about financial inclusion get it wrong. For all intensive purposes, Africa's banked. When the SASO social grant cards were issued 14 years ago, that was really the poorest of the poor getting access to financial services. But the biggest problem we got in South Africa, like many markets in Africa, so it's not just limited to South Africa, but let's just talk South Africa for now, is that that person with that financial instrument or that bank card can't use it in what we typically term the everyday. And so most of us on this call probably won't be able to relate to this because we all operate in the formal sector. But when you start going down to the deeper, more rural part of South Africa and into what was traditionally our townships and those communities, it's all a cash-dominated sector, and there's actually no card acceptance device. So you cannot use your card in what we term the everyday. And so ultimately what we're trying to solve for is how do you allow for that vendor who's got a cardboard box with 10 packets of knickknacks and 5 lollipops on the side of the road, how do you enable that person to be able to receive a payment, an electronic payment, that they don't have to deal with cash? And so many people will think it's probably a pipe dream. The technology is actually already there. It can be utilized. What we do need to solve for, though, is the regulatory environment in South Africa still needs to play catch up. And that's largely driven by the South African Reserve Bank and PASA. And then obviously the participants in that ecosystem coming together to really make this happen. As I say, the technology is there. We know how to solve for it and how to make it as cost effective as what cash is. But we still need to get our regulatory construct sorted out that will actually allow us to be set free to be able to achieve that. So in the meantime, we're setting ourselves up. We're one of the 5 designated clearing participants in South Africa, which sits in the inner core of the payment space alongside the banks. We principal licenses of the likes of Visa and MasterCard, and we sit in the PCHs alongside the banks with equal voting rights in those forums. So quite an empowered position to be. And the reason why we went down that route of getting designated, and that was really to be able to control our own destiny and be in charge of our own decision making and our own risk. And so been an incredible journey the last 8 years.
Okay. So there's a lot of battle scars that you had in terms of being in the corporate space, right? Listen, I'm very grey, lots of battle scars from corporates. But be that as it may, it sounds like those battle scars were in service to you. You didn't realize it then, but they certainly have cultivated a resilience in you to decide, okay, listen, I'm going to go do this on my own. So what was the greatest why of why you started? Because it's the one thing, there's a crossroads when we all get to our 40s and it's like, okay, what am I doing next? But I think it's more than that. So what was your, I don't want to call it midlife decision making around this because it sounds like it's a midlife crisis. But what was the why? Because, you know, we don't only start a business. You touched on some of it early on, the underserved communities. So is that the bigger why? Is it connected there? Can you share some of that before we delve into the meat of your business?
Yeah, I think the why is quite simple. It's really about, you know, you can go through life and you can keep doing the same old. And yes, you can have a successful career. And I guess that's why we have people that sit in corporate and maybe work for one company their entire life. And, you know, they retire at 65 with their pension and they sell into the sunset. But, you know, that's just not me. I've never been a person as an individual that is just happy with, call it the status quo. And I guess my whole career has been working in sort of environments where we've always challenged the status quo within, you know, the framework of, you know, obviously operating within the regulatory construct or within the bank structure or whatever the case is. But I've never sat in sort of even in the banking space, I never sat in the business as usual. I always sat on the outside of that, which was, okay, how do we do things differently? How do we challenge the existing models? How do we create almost challenger brands? And some of those learnings were then adopted and actually, you know, incorporated into the bank's business as usual. But it became a bit of a learning field, an experimental space, and in a space where you're continuously navigating changes and you're dealing with third parties. So it's not, you know, it's not just your rules. You're having to play by a greater ecosystem's rules. So when it came to, you know, looking at doing my own thing, I think it was probably driven by a desire of, can we leave a legacy? And that's still something that's going to prove itself in the years to come. But it's really a case of, if I had to look back in my career at some point, I'd like to be able to say, we left a legacy and we made a difference, and we made a difference to a sector of society that is highly demanding, services which they're just not getting exposed to, because unfortunately the traditional incumbents are very much set in a one-size-fits-all type approach, and they're always doing things the way they've always done things. And if you had to take a bank, yes, they all talk about going into this informal space, but it's actually very hard for them to pivot from their traditional business where it's highly regulated, highly secure, big volumes of money, big values in terms of transactions, and now to start pivoting into this informal space, which they're not necessarily geared for, and the margins aren't there, and there's no real reason for them necessarily to go into that space. And hence why it actually takes the fintechs and it takes alternative players to say, what, let's go and try and solve this challenge that we've got out there. So I think it's driven by that. I mean, as a person, I'm highly competitive, so I guess there's a competitive spirit too, to say, well, if nobody else can get it right, let me see if I can get it right and lead a team that can actually crack this. So that's the other drive. It's I guess it's a competitive drive to say, and that's typically, I guess, the mindset of an entrepreneur in many ways. It's just like, just keep going. And often I get comments from people out there, and even some of our bank partners, going like, Andrew, how do you in the team keep doing this? How do you keep at it? How do you keep basically steering the course? And my answer is pretty simple. It's like, we know we can get it right, and it takes a bit of hard-headedness, I guess, and understanding shareholders at times. But it's just that drive. It's that drive to be able to make a difference ultimately.
And that's the thing I wanted to say, is that what I'm taking out of what you've just shared, the bigger why is for the greater good of humanity. And I love those stories, because as much as there was this dilemma, am I going to leave corporate and start my own thing? This backstory is always, how do I impact and serve others? And how do I set that example? Not only for my peers that are out there, or friends or colleagues that used to be in the professional realms, but for my kids. So how do I, for my kids as the next generation, set the same standard for them to say, we don't need to go with traditional paradigms of, yes, you need to go and work, go to school, study, and then do a particular profession. Entrepreneurship is a significant contributor to the economy, to employment opportunities. And so whilst your endeavor is to become self-actualized, I suppose you wish the same for others too. And so that's almost like, for the greater good of others, how do we get others then to go into this direction as well, to lean towards making impact, not only for themselves, but being in service to others. And you started touching on, I told you we're not going to necessarily go into a guided flow here or scripted approach, because that's not how this goes, right? But in terms of the battle scars as an entrepreneur, let's go there, because you've touched on briefly around, how do you do this? And yes, it is about mindset, but there must be those days where one feels, I mean, I'm an entrepreneur myself, and I'm like, sometimes, really? Do I really want to grind this hard? Is it even worth it? Do I really think this is possible? Am I good enough to do this? So there's those feelings of imposter, and those are some pain points that come up from a mindset perspective as an individual and entrepreneur. What are some of those for you? How do you sabotage yourself in this world of entrepreneurship? And what are other pain points that we're going to talk openly? Let's not just talk about what's above the surface. Let's talk about what's beneath the surface.
Yeah, so I think one's actually got to look at the natural I guess, navigation of the process an entrepreneur goes through when going through a setting up a business and starting a business, and ultimately, moving from a startup to a scale up and beyond. And so I guess I can relate to the pain points as we've gone along the journey. So typically in the beginning, it starts as a great idea or concept, and a big rosy picture, and you sort of think, gee, okay, this is the roadmap. I'm going to dedicate the next 3 to 5 years, and we're going to build the business from nothing to what we want it to be, almost the Everest of the world. And
Yes.
you kick off day one super excited, and you start the journey. And right on day one, you actually encounter your first, call it, fork in the road. And that first fork is related to, okay, we've got this great idea, but especially if you're going to be systems dependent and stuff, so how do we actually put this idea into practice? And typically you've got to build something, so you've got to create an asset value of some sort. And that's where the first fork in the road comes in, because it boils down to, okay, are we going to fund this ourselves, i.e. scrape some money together, either amongst yourself and co-founders, or you get some angel investors, or get some friends maybe that have got deep pockets and deep arms to get to the deep pockets, and can lend you some funds. And so you start the journey, or you go into the capital markets, and you actually go and get some VC funding behind you. And that becomes the first fork in the road, because the minute you go and you get somebody else's money, typically there's a dilutionary effect. And I guess that's probably where we made some of our first mistakes. Was we thought, okay, we know what we want to build. We knew more or less what the runway was going to look like. And we went and we said, okay, we need X in capital. And so brilliant, got X in capital, gave away half the farm in the process, and we started the journey. And then you hit your first hurdle where, okay, we're working in a very highly regulated market in our world, being payments. And so there's certain permissions and certain relationships that you need to have in order to get things done. So initially, when we started the business, we worked on a bank sponsorship model. So we approached one of the banks, and we started operating under their license. And, that's all good and well, but you put that agreement in place. It doesn't happen, even though you want it to happen tomorrow. The negotiation, and then the signing of agreements, and everything that needs to be put in place before you can even start operationalizing. A number of months go by. And in that process, you're just burning capital, trying to just keep the lights on, essentially. And so that journey starts in terms of that balance between accelerating the business and the growth based on the limited funds that you've got. And those limited funds also curtail the number of resources that you can also bring on. And ultimately, you start eventually getting trading, and you start getting some income coming in, and you see, okay, the trajectory is on the right track. And so that's quite great. You launch your first products, and then you're in this constant battle between income versus your OPEX costs. And your OPEX costs typically end up being resources. So as the business grows, you need to start bringing on more people, and typically you get into a space where the income doesn't grow fast enough for the number of people you need to bring on. And so that always becomes a bit of a challenge. So as the entrepreneur, you end up taking on that onto your own shoulders. So I've got, my wife took a number of videos of me on the beach when 2 young kids building sandcastles and me being on conference calls. But that was life, holidays, they may have existed, but it was every day, either on calls or on the laptop, just keeping things going. And after a period of time, I think close to 5 years, my wife got clever and said, okay, our holidays now are going where there's no connectivity, because it was the only time we switched off. But that only came after 5 years, where I had actually had the opportunity of being able to, the team was then formed and empowered and could actually run with things. And, I didn't have to be around all day, every day. But so you go through these milestones. Once we launched as well, we had 2 different products. One of the products is the ability just to deposit cash at a retail environment into any bank account real time. So we run all the infrastructure between the retailer and the bank using the card rails. So we use Visa and MasterCard as the ramps, and the product's known as Deposit at Till. But even on that journey, we launched with the first bank. We then brought the second bank on whilst we waited for the regulatory rules to come into play, which eventually got promulgated, and we utilized that then to expand and open it up to other banks. But I remember, sure, probably about 5 years ago now, was we had one of our sister companies that we were incubated out of had a year-end function, and it was a Friday afternoon around about lunchtime. And I just thought, okay, before I go to the year-end function, let me just check the numbers of the day and how things were tracking. And I suddenly saw that we had a spike coming through in numbers, and I thought something looks suspicious here, and dived into it. And before we knew it, we found basically a syndicate that managed to get into found a shortcut in the solution. So here we were, year end. Retailers are in freeze, banks are in freeze, developers are all in freeze, and we have a crisis on our hands where we've got basically a syndicate that's found a loophole in the solution. So anyway, a couple of calls around, and we were told, you're not taking the solution down. It is up there, it is running, it is your problem, and basically we had to sort it out. So anyway, there was no year-end function that year. And we managed to get through that weekend by changing limits and throwing the syndicate off. And by the Monday, we ended up rolling out a fix that eliminated the issue whilst we're in freeze. And that freeze period is probably the longest time of my life, 2 months. And yes, by the time we came out of freeze, we rolled out our third revert of the solution, and we ended up with that particular play. We actually ended up recreating the solution 4 times before we got it right. And so yeah, you learn. We took a knock from fraud that was created, and we took the knock on the chin from a loss point of view. Luckily, we managed to pick it up early. And then you realize also how the crime, how crime is pretty prevalent in our country today. You end up getting into the commercial crime courts and dealing with our police services and investigators and whatever else. Even the affidavit you got to submit when you open a case, you got to end up redoing 3 times because people aren't necessarily up to speed in terms of commercial crime. And so you go through that experience, and that just toughens you up even harder. But yeah, those are bumps along the road that one's got to experience. So that was one of the pain points we went through quite early on. And then other pain points have been more in the regulatory space as we went down the route of licensing. We went to the SARB, for example, with what we wanted to do, and spent a year basically engaging, bouncing back and forth, only to realize that what we were trying to do was actually a step too far based on what the regulatory constraints are that we all got to subscribe to. And you actually end up peeling back what you originally envisaged to do just to be able to get going. And we managed to peel back some of the stuff we wanted to do, and we then got our licensing approved by the SARB. And then we went into the next phase, which was getting more capital to do a bigger build. What we originally
another challenge,
which creates a further dilutionary effect. And anyway, and that build then what we planned to take 12 months to 24 months. But we eventually went live with our license solution on the 23rd of August last year. And, you think about, we went live after pretty much a 4.5, 5-year journey at the time in terms of building, going through licensing and everything else. And from a team point of view, we all thought, sure, there's going to be a big celebration. I think the celebration was more a relief than what it was actual celebration of getting something over the line. And
I can imagine.
You just realize, it's like you're driving so hard to reach this pinnacle, and when it happens, it's like Sure, we got there. And then you realize that that's only the start of a next chapter and a next journey. And it's about how do
Of
you keep
course.
motivated and keep the team motivated to basically, all be driving in the direction to aspire to what we really want to achieve in the long term.
I'm hearing a couple of things, right? And I'm going to summarize it just in terms of what I've heard, and then we'll move on to some more meat that I want to get into in terms of where you're heading and support, etc. But what I'm hearing is, if you're getting into business in a heavily regulated and in a compliancy environment, build in that time and ensure that you have sufficient capital and buffers within that time frame, because having worked in corporate myself and having worked in financial services for almost 12 years, those compliance and legislative stuff and agreements can very much bring a dead stop into moving into production, which is called going live, right? So that's what I'm hearing. If you're in a heavily regulated environment, build in the buffers for that. Make sure you fund it. Then I'm also hearing, understand the systemic nature of the environment. So when we're building our businesses, we don't always understand the system that it might be constrained by, and that might move it forward as well. And often I feel, from my experience, not only coaching entrepreneurs, working alongside and holding that space for them, is they do not often go and build or create a new product or service with the end customer in mind. It's the pipe dream, it's their idea, and it's what they believe is possible. And sometimes they forget, I'm going to rephrase, very often, not just at the SMME, but even in the corporate realms, they forget that the customer is first and foremost who you need to keep in mind. Because just as you had to rejig a couple of thought processes around how you're going to take this to market, had you just started there, I suppose it would have been a very different conversation today. But notwithstanding, those were the important lessons, right? Those are the lessons that helped you craft the right product and service. I want to just acknowledge some of
that. You can test these things until you're blue in the face in your what we call a UAT or test environments. But the true test is when it hits the production environment and it's open to the public. And trust me, the public will always find a gap or a element that you've overlooked. And I mean, the things that came up, we would never, ever have envisaged. I mean,
never.
Dealing with traditional payments and stuff like that, we thought we had all the gaps closed. And it was a very small technical thing that somebody managed to just find a gap in a window and grabbed it. And it would never even have come across our radar that was even possible. So yeah, the best test is actually out there in the real world. What you do in a test environment where you're trying to simulate things, you're never going to actually be able to simulate 100% what the real world looks like.
And let's not forget,
mention is just in terms of those bumps, is never underestimate the market that you're actually operating in. So whilst we actually set ourselves up not to compete with, the traditional banks, we actually want to basically work alongside them in terms of our solutions and offerings, is ultimately we're going after what we see as a greenfield space where nobody's currently cracked it. But, the minute you put something out there, you've got competitive pressures coming in, you've got dependencies on other players to also play their part, and a number of them will drag their feet whilst they try and either disintermediate you or try and bring their own solutions in so that you're not successful. Some of it's bullying tactics, and you've just got to keep your head down and keep going, because, you can't let those things distract you. You've just got to be that small fish in the big pond that's got a lot to prove.
So I mean, I wanted to conclude on, when we're designing any product or service, we've got to design from an empathetic standpoint. So going into the field and understanding at grassroots level what's happening is the most salient thing you can do at the start. But I mean, when I packaged this event post together, I crafted saying it's navigating uncharted territory in entrepreneurship, right? And I just want to highlight some of the things we've just discussed right now. You guys are ecstatic during the initial stages, as you've mentioned at the start. There's innovation, it's driven by curiosity and passion, and you just want to serve, serve, serve. And then this phase, as we've said, presents its own unique challenges because you're going from startup to scale up, which we're going to delve into now a bit more. And that in and of itself has different hurdles to overcome. There's the financial management aspects as it pertains to, as you said, resources, because it's the OPEX cost. And then being prepared for market fluctuations, right? There's that too. And I did highlight the reality of remaining resilient and adaptable, because you're dealing in a volatile business landscape, which includes competitors, right? Or I like to call it, who calls it? I think it was Simon Sinek that says your willing rivals. They're not really your competitors, you're willing rivals, because you're all in it to serve in the same manner. So if you're willing rivals, imagine you can learn from each other and lead with empathy when you're seeing they leading in a particular way and taking the lessons from them, right? And I suppose now what I want to tap into is the supports, right? So as an entrepreneur and founder, we need to understand what the system is underpinned by, what's driving the system, but there's also support. But before I go there, let me just acknowledge who is here on the Instagram. Thank you, Ian, for joining us. Ian is also an entrepreneur from Grow South Africa and EcoBricks. I do some work with them, phenomenal work, impact work that they're doing. And then Spam Undead, I don't know who that is, but thank you for joining us. And this audience is very quiet here today. Usually they're very interactive, but I think you're just speaking their language today, Andrew, so they have no questions. Those that are coming in afterwards in the replay, don't hesitate. Please ask some questions, even post, because we do go afterwards and respond to those questions. So let's come back to the support. So what type of support? I've met you on the Level Up program through CIBA Ignition Academy, which is an enterprise supplier development program funded by RCS as the sponsor, right? So in that program context, there is different layers of support. We look at where you are in your business and we say, okay, let's meet you where you are, because we're not a typical accelerator. We're not a VC. Our intention is, hey, let's see where we can meet you and co-create the journey alongside with you. And with that comes, whether it's a mentor, whether it is a coach, as in the role that I play. I have dual hats, as you know. I support with projects as well in piloting some of your products or services if it's a fit for the corporate that we're working with. But I want you to unpack support, but not only what you've received. Where do you feel it's lacking in this realm for entrepreneurs and founders?
Yeah, so it's a very good question, because I guess support comes in many different forms and designs. But some of the support you is fortunate. In other words, if you can get into an accelerator program or into a incubator out of another business, that generally is useful, because there are then structures and that can be leveraged, and people that can help with guiding and mentoring along the journey. I think where South Africa lacks a lot in terms of entrepreneurship is just good mentorship, players. And when I say mentorship players, it's people that have actually gone through that entrepreneurial journey, have been successful, have basically sold their businesses, and now have moved on, typically retired. And it's really those individuals then coming back at a grassroots level to share like learnings and share experiences and stuff that you can actually just have somebody to bounce past things that you're grappling with or challenges that are arising from time to time, just to help navigate that journey. And I think that's probably what's lacking. It's you don't actually need stuff that's formal. It's more that you just need somebody, a sounding board where you go, I'm grappling with this. What did you do in your business, or how did you navigate the stage of the evolution of that entrepreneurial journey? So
Yes.
yeah, that's what I would encourage, from corporate South Africa, is those the people that have sort of exited out of businesses that they've grown and stuff, is that they actually come down to a grassroots level. Because what we typically find, they do come back, but they come back in the form of, forming funds and VC, venture capitalist ventures and whatever else, where they happy to start providing capital into the market and that, but they only then accessible typically to those corporates and all those startups that they're funding. So yeah, I think there's platforms like that could be leveraged, where, and I guess it needs to be coordinated, but just
Yeah.
how do you make these businesses more accessible, these founders more accessible, that entrepreneurs can actually reach out to. So that's the one. I think that we can do a lot more just from a South African context, and it doesn't have to just be purely South African. I mean, there's also a global world and a global village that we operate in these days. So those
Yes.
entrepreneurs are all over, and we've got a number of even South African businesses that have globalized and gone international, and there's a lot of learnings that could be shared there. So I think I've been quite fortunate just in terms of, and ourselves as efficacy as a team, we've even been fortunate is that we've got incubated through an existing business, and then that's sort of got other shareholders that came in that are typically in that VC space and in some of the larger sort of VC environments in South Africa. So we've got access now to a plethora of these individuals. But they weren't there in the early days. It's literally in the last 2-3 years that they've become more accessible. And then you as an entrepreneur has actually got to try to reach out into those networks, and you've got to network, and you've got to actually put yourself out there and be vulnerable in a way to be able to learn. And I'm probably quite critical of myself here, as I haven't necessarily done that to the extent that I wish I could have. And it's not because I didn't want to. It's more that you're so busy and so caught up in the everyday and the doing, and just trying to make sure that everything's working 100%, that you sometimes don't have time to look broader and more strategically, or just to take a step back for a while and say, okay, breathe, and okay, what do we need to do? And so yeah, that's, as I'm talking here, you can probably pick up the little nuances of, from a support point of view, you can probably hear that there's gaps, and it's about how do you create those opportunities for entrepreneurs to be able to reach out when those gaps occur, to be able to plug them as quick as possible. And then, with that becomes, you're always going to have failures as you go along and you try things. And I guess the key thing is, when you're going to fail fast and move on quickly and take the learnings from it. But that also comes from that whole mentorship sort of approach, or having that platform where you can engage with people that have been there, that can sort of help you guide you through those challenging times. So that's what I would say we specifically would require, and many entrepreneurs, need that. And many entrepreneurs aren't fortunate to be in structures like where we find ourselves as efficacy, and it's even harder for them.
Andrew, I wanted to highlight, there's a couple of things that one, there might be a mentorship program, but what I am hearing is that sometimes the mentor to mentee exchange is not necessarily a right fit. So it's not necessarily somebody that's walked an entrepreneurship journey themselves, that's been in the trenches, that's navigated this uncharted territory themselves, and that can say, you know what, here are the lessons. Let's accelerate those lessons for you so that you don't repeat them, right? So that's the first thing. Secondly, I'm also hearing that there's a need probably for cross collaboration with other entrepreneurs, that there's almost a pay it forward. Let's pay it forward to one another, because we get so busy working in the business, the old adage saying, than working on the business. Maybe there is coming up with a forum, if there isn't already, where it's entrepreneurs that are actually genuinely sharing these struggles. The thing that made me start this segment of the entrepreneur mindset was as a coach, we coach and we get to hear the battle scars and the things that entrepreneurs don't talk about. The fact that there's not enough money to pay their bills at the end of that month. The fact that possibly they don't have the right skill sets to perform certain things, or confidence is lacking to actually approach whoever it is they might need to approach from an investment perspective, or whatever the requirements are in their business or where they are in the life stage of that business. There's also the self-sabotaging characteristics that play a role when you are in a business. You don't want to highlight that to the world. So why I started this segment was so that this becomes a platform, one, to share those stories, two, so that other entrepreneurs will start looking at how do we cross-collaborate. Because my pains are also your pains. And if those were my gains, how do I, make it your gains? But here's the thing. Entrepreneurs don't want to share with one another because they fear that you're going to steal my idea. What are your thoughts around that? How do we get this ecosystem to be more cohesive, to come together? Any ideas?
Yeah, it's an interesting one. I mean, we've realized that because we've seen some of our ideas already being deployed into the market through other parties. And yes, it can be a hard pill to swallow, as they say. But, you also got to look at it and say, well, and in fact, I had this discussion with one of the South Africa's big banks a while back. And I said to them, or the senior individual, and I said, you know what, this marketplace is so big. And they were actually about to launch a product that competes with us. And I said, this market is actually so big. We can't wait for you guys to actually get into the market and get into production, because that will actually just get some of that groundswell activity and awareness going, where it's not just us as a small player in a very big pond trying to, change the world, but we've actually got another big player in the pond competing, but actually also creating that groundswell and almost endorsement of what we're doing. And the fact that they were a follower actually endorses what we've done. And so, yeah, I think there's different ways of getting that sort of experience through and being able to learn and leverage off that. I personally think that you're right. We don't share enough amongst entrepreneurs. Generally, I've been quite open with my engagements to say, this is what we do, this is what we're about, these are some of the things that we're grappling with. I think that's also about transparency. And I'm quite happy because the payment space in which we operate is so large that there's more than enough room for multiple competitors here. That even sharing some of our ideas, if it just creates interest or it creates I guess a little bit more of a participative environment, the ecosystem will accelerate to the benefit of everybody. So I'm not necessarily precious on what our plans are, where we're going, and sort of how we're approaching things. Because it does take a collaborative approach, and also with the regulatory challenges that we have, whereby we need the regulator to make decisions on some basically fundamental things. If you've only got one player in that market trying to drive the regulatory change, you don't have that groundswell that I've been referring to actually driving the policymakers to accelerate their decision making. And so you've actually, and we even found it with some of our things, we've had to start pushing products into the market that is maybe not even commercially viable, to be able to actually have some data points that we can take back to the regulator and say, here's the data points. This is why it's good for South Africa. This is where things need to be. Can we now try and formulate a way forward in terms of getting the policy changes made and getting those changes timelessly? And what Unfortunately, in some incumbents, when you're an entrepreneur, every day counts, because either you're making money or you're losing money. There's never an in between. So
Of course.
if you're not having your products rolled out there and scaling, you're typically losing money. And whereas when you're sitting in a corporate, an individual goes to work, they get their salary at the end of the month. If they don't deliver something this month and it rolls into next month, they're still going to get their salary at the end of the next month, and so it goes on. When you're in the entrepreneurial world, that might not mean that you're going to take a salary the next month, or you're not.
Sure.
It's going to take another month or two before you can get to a point where you're going to start generating the revenue that you require to actually ensure that you've got a sustainable business. And so, and also often, excuse me, means that you need to be more dependent on your shareholders for funding and stuff. So all these delays all have a ripple effect in terms of creating that sustainability and sustained business. And sometimes you actually want the market to and competitors to actually play their role in terms of accelerating traction and growth in the market.
The 2 departure points on this, then we're going to move on. But I just want to say, Ian is saying, super interesting discussion. Ian, are there any questions you might have for Andrew? Let's put him on the spot here. I know he's got the gift of the gab, but let's throw in a curveball question for him. I'm going to throw in a curveball call to action for you, because if mentorship is something you're saying is support, then I'm going to suggest you pay it forward. And here's one good environment to do it in. CEBA's Connect to Grow platform is looking for mentors. So there's your call to action to become a mentor on CEBA's Connect to Grow, because I think there's already then the starting point. So we're going to look at you pioneering, having the right fit of entrepreneur for mentoring another entrepreneur. Okay, so that's your call to action.
In trouble because I can never say no to these kind of things, and before I know it, I'm sitting on every committee and everything that I shouldn't be, but open for the challenge.
But you're up for the challenge. And the second thing is the departure point on this is it comes back to that systems thinking approach, and using those, leveraging that data to tell stories and enriching whatever needs to be done, because then might expedite the compliance legislative realm, because you're now telling a story on how this is going to have a key objective, outcome, and impact. So you are, what I'm hearing is you are meeting the stakeholder. There's a win-win for them in terms of serving their objectives, and you winning in terms of serving the greater good of the underserved community. Yep. So on that note, we have 13 minutes left. Okay, so Ian says competitors who copy, highest form of flattery. I agree, Ian. You want to comment on that one, Andrew?
There's that saying of hindsight is the perfect science. So probably in a couple of years from now, we'll look back and go, yeah, we'll take the compliment then. Right now, it still feels a bit of a battle.
So in the next available time that we have left, I really want to go into, and I'm not sure if Greg Head is here. Greg is a board CEO director, and he's from the States, but he's very much into mergers and acquisitions. And so I want us to really delve into a bit of a different story, and a unique, and I suppose a nice problem to have when you're wanting to now grow and scale. You've done what you needed to do, and potentially you want to look at a merger and acquisition approach in the not so distant future. Because for you, if I've heard correctly or listened well, it took you 4 to 5 years to actually go live, right? So what's the next big aspiration? Is it selling this business, and then what from there? And what is it that you're asking for in this critical juncture? Because this is a different juncture that you're now at. From a few years ago, do I leave corporate and start this? Now it's, okay, what's next on the radar? And how am I going to leave this? And tell us what's missing for you as well.
Yeah, so that's a tough question. Crystal ball would be the perfect science here, but yeah, I mean, it's very difficult to say exactly what the future will hold. But I think from an idea point of view, we've very much been in that build phase, very much in the startup phase. We've now got some of the key platforms in place. So we've got the products that are in the market. It's now we've got to go to the next phase, which is the scale up phase. And so that's really what I typically call getting the runs on the board, because we can't be building forever. So there's now needs to be getting those runs on the board, getting the positive trajectory coming through. Because typically, once the business starts rolling, it just keeps getting more and more momentum, and that's where the scaling effect takes place. And then parallel to that scaling effect, there's still some more build work to take place as you keep up with trends, you ensure that you remain relevant and try and stay ahead of the curve of some of those competitors, but even new things and new innovative solutions that we want to bring in to really be able to achieve our goal and set the legacy. And there are obviously opportunities around, I mean, we've already had it where people come knocking on the door and say, would you be open to a discussion where they're either wanting to buy a part of you or would want to acquire the business, because it takes a long time to scale this, or not scale it, sorry, to build. And somebody coming into the market starts seeing what we've created and goes, sure, I wish I had done that, and then realize, well, if they're going to embark on the journey, they'll probably be able to do it quicker than what we did, but it's still going to be a number of years. It's not going to be down to months. And so as a result of that, there are organizations out there which start, inquiring and trying to understand sort of where we're going and is there a way in. And as an entrepreneur and as an entrepreneurial type business, one's got to consider those options, and one's always got to evaluate where are we today, where are we wanting to go. I think generally speaking, we want to go through that scale up phase and really start landing some of the solutions we've built. It would be, I think that's part of the being able to say you've achieved success at some point is being able to actually have scaled. It's all very well having products and the product constructs, but I think true success is only once that scaling has taken place. And then one of the things which we haven't really touched on, but from an entrepreneurial point of view, is when you set yourself up or when you set a business up, one should actually start thinking from day one is, if at a point somebody had to come knocking, how would you actually go through that phase of a merger and acquisition process? So we've had a degree of it as we've put holding companies and companies together that now own us and structuring and stuff that comes into play. But it's pretty much been an easy journey because it hasn't been somebody completely from outside. But should somebody come in from outside, and this is, I think, a challenge that many entrepreneurs don't necessarily think about when they start a business, because you start a business and you probably think, well, we're going to make a success of this. And you don't actually think that maybe at some point you're going to need to sell it. And that might be because you're forced to sell, or you might be wanting to retire, you're wanting out because you've had enough, or whatever it might be, or you see an opportunity. And so one of the challenges is, how do you actually build a business but gear it for sale from day one? And some of those things, and we see it at times when DDs and stuff, due diligences have to take place, where companies just don't, or entrepreneurial type organizations just don't have their house in order, and financials and audited things and paperwork and documents that are all well filed away in a drive that's easily accessible. And so you start going through a DD process and you ask for certain things, and the entrepreneur is scrambling around in the background trying to find a document in the inbox which they last looked at 6-7 years ago. And so I think there is some guidance required as well to entrepreneurs to say, from day one, just make sure you've got a good filing system, that you can put your business in a position that should somebody come knocking and you want to entertain the conversation, that you can actually open the door and say, here's what the business looks like, here's all the accounting records, here's all the procedural documents and everything, and it's all well filed and easily accessible, that somebody, a prospective purchaser, can actually look at it and say, this business has got the act together, the admin is in place, and that become more chances of you actually being able to go through that merger and acquisition process than if everything's all over the place, which ultimately could end up in a discounted price.
I'm going to respond to that now, but there's a question. I'd like to first encourage the questions from the audience. Ian is asking, at the formation stage of your business, did you create it with the intent one day to sell it?
I'm one of 5 co-founders. I think if you had to ask all of us, we'd probably have a different view, and we probably had a different view 8 years ago to what we have now. So yeah, I think we did. We always said that the idea would be to build something unique, scale it up, and then get it to a point where we felt we had achieved what we wanted to, and at that point, there would be the intention of offloading it. None of us actually went into the business saying, and I think it varies depending on the nature of the business, but most of us all got kids. None of us went into the business saying, Nestle, we want to try and create a business that we would offload to the family and they would take over and it would just pass through the generations. So I think that's maybe the nature of payments and just the industry we're in, where it's not like some businesses which typically start in a family and will just get handed over through the generations. So I think we did, we had to be honest with ourselves. We definitely went in with the mindset of getting this thing scaled and at some point looking to offload it.
So I always throw in a curveball, and now's the time for that curveball. I know we only have 4 minutes, because as I was listening to you around, getting all your ducks in a row, I'm not hearing one particular thing, but that's just me because I'm passionate about this. And I'm also now wanting to respond to your 5 different owners or founders in this business. Let's be clear that values alignment is equally as important, if not the most important, right? Correct. So what were some of those incongruencies maybe with values, or were they all congruent with one another and that's why you guys just gelled? And is that something to consider, not only within your partner founders, but outside of that, within your partnerships, be it the banks that you partner with, be it within whatever those ecosystems? So that's the one thing I want you to respond to. And then secondly, it's align yourself with programs. I'm very pleased that Beverly, my colleague, she is very stringent on understanding where you are now in your business. So you would have embarked on doing a 360, which is really underpinned by the business model canvas and knowing where you are at every stage in your business when you start with a level up program. And that becomes almost M&E, monitoring and evaluation, to say, what happens 6 months down the line? What happens 12 months down the line? So it's a valid point that you raise, but I'm wanting to bring it into context of, for those that are going onto these programs, make sure that even when you start a program, you have that. So let's get back to that values question and talk to that.
I think the values were generally aligned. What probably threw more of a curveball was age differences. And this is something that you don't necessarily think of when you come together as a founding team. So we had, I guess, the age differential was probably between I was sort of sat in the middle, but between the youngest and the oldest was probably about a 25-year differential. I mean, when you look at 25 years, you could equate that to a generation gap. So
yes, exactly.
It's all good and well. So you start this thing, and some of us were directly involved. Others were. Some of the other partners were, or co-founders were, sort of indirectly involved. And then you get to a point where certain people are a little bit older in life. Kids are at varsity or leaving varsity and wanting to move on. And then you've got sort of some of the younger generation that are, hey, we're in it to win it kind of thing. So that also presents its challenges, because along the way, ultimately you're trying to keep your team together, from the get-go till what we would call a trigger event at some point, where, if you are going to sell, everybody exits at the same time. But the reality of the world is that's not how things pan out. So yeah, I mean, in our world, out of the 5, two people left early in the journey. One was more in the corporate space, and had to dedicate his time and effort there, so that created a bit of conflict. And the other person had already retired, came in, we started the business, and then after I think 3-4 years in, he decided that that he's had enough of now working. He now officially needs to retire. So we actually exited those two co-founders, and sort of the three of us carried on. So yeah, I mean, I think the values were still all aligned, and even today the values are still there in terms of what we're wanting to achieve and sort of how we approach things. But that also boils down to leadership and also people understanding their roles. And that's a critical thing. And it's a critical thing to establish quite early, because, even in the beginning, we also had who's actually in charge here. It was, we were all workers. There was nobody necessarily taking the helm. And it was only when we started really generating revenue, sort of early phases. But I mean, that we then decided, okay, somebody needs to take the lead here. And I got the short straw, I guess, or I got the privilege, whichever way you want to see it. But once you had somebody that was then accountable and could say, all right, this is the way we're doing things, and could then, you got to lead. You're leading a number of stakeholders. You're leading your founding team. You're leading your employees. You're leading your shareholders, and then your stakeholders being your clients and the market out there. And so, there's a lot of balls in the air that you've got to try and keep moving in the same direction to ensure that you're able to be successful. And don't underestimate what that means, because that's a whole different ball game to actually just running the business and doing what one's expected to on a day-to-day basis.
Exactly. Andrew, on that note, can you believe we've reached our hour? In fact, we're over the hour. I do want to ask you one final, but if you can succinctly, in 30 seconds, tell us, what was the biggest lesson, or fail, as you like to call it, failing forward lesson that you had to experience in this business to date?
Sure. Yeah, I think our biggest one was probably that issue where we had fraud, when a syndicate got involved early on, and realizing that, I mean, we had tested this thing thoroughly. We had launched with a bank partner. We'd run it for about 9 months without any issues, and then it was when we started bringing a couple more banks on, and suddenly we had this syndicate that got in. Is never underestimate the power of, if you want somebody to point out your failures, it'll be pointed out to you, and it's gonna be in the public domain. You're not going to be able to simulate it in a test environment. So, and that, I guess, you can apply to all things in life. You can practice all that you want for sport or a oral or a test or whatever the case is, but somebody out there will find your weakness and be able to point it out to you. And I think that's probably the biggest learning that I took out of it, was to say, we were so confident that we had all our ducks in a row, but clearly we didn't. And that's those steps that you learn and take it like anything in life. So it was a hard lesson, but we got through it and we came out stronger.
And one that won't be repeated again. And so what I'm going to conclude on, and thank those that have stayed with us over the hour, is that we need to continue having a growth mindset amidst those challenges, amidst those points of pain, amidst those, you called it the fork in the road, the barriers, the obstacles, the rejections. All of these are redirections. So on that note, Andrew, you can stay. I always say we have a debrief afterwards, a brief one at that. But thank you for those that joined via Instagram. I see Shafika joined at the end, but do watch the replay. Thank you, Ian, for your questions. And Ian will be on one of these lives, not in the not so distant future. Thank you, Andrew, for your valuable insights. It's been a very fruitful discussion today. I've certainly learned a lot from you, and I'm sure those that are listening in afterwards will too. So on that note, I'm going to end the live.
Thanks, Anissa. Thanks, everybody.